Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 16th of July, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the third week of July. And if you see across all the three majors, all of them have hit some level of support, some key levels, and has attempted to recover. So we'll see if this is finally a key support level where they can build a base, and especially for the Euro. Let's take a look at that. With the Euro dipping below parity for the first time in 20 years, and it did test twice earlier in the week before dipping below on Thursday. Hit the low of 99.52 before climbing back up, closing above it, and then recovering further on Friday. So on a weekly time frame, you will see a longer low wick that closed just above the 162 pip extension. So it needs to recover further and above the 102 in order to make a significant recovery here. Otherwise, if it dips lower and breaking the parity again, then it could seek out the 200 pip extension just above 99. So a critical week for the Euro with the ECB announcing their rate and policy decisions on Thursday. So let's see if it's able to make a significant recovery this week, or whether it's just going to consolidate and get stuck in another range here. And we'll compare that with the US dollar index, which is inversely correlated, and see whether the US dollar did hit a peak and retrace lower as well. Okay, let's switch over. And here's the DXY, the US dollar index, where on Thursday it did hit a peak of 109, hit it exactly before pulling back and then retracing further on Friday. So back below the 162 fib extension. So this 109 is now resistance. With this area of confluence with the 2 fibs as a significant support zone now. 105 is still a key support, but let's move this up to 106. So let's see if it's just going to consolidate within this zone, or if it's going to dip lower further. For now, it doesn't seem that it's going to break out higher. It's taking a pause and likely going to consolidate within the range between the above 107 to 109. So let's see whether there's any breakout or breakdown for this coming week. Okay. So above that, there is a significant resistance at the 200 pip, that's at 109.98. That's just below 110, a key round figure, and let's mark this as a significant resistance here. Unlikely it's going to attempt to break out higher next week, but we'll see. It's going to be probably the week after with the Federal Reserve meeting. Next week is just the ECB. So it's likely the week after where we'll see where it's poised to target. Okay. So let's move back to take a look at the other major pairs. Moving on to the cable, where it did continue to dip lower again to hit the 118 level, dip below 118, and then recovered on Friday. So this level was too low here. We could still leave it as a retracement reversal here. So sitting on the 162 fib extension, below that is the 200. But for now, let's move this to key support zone at the 118 and the 162 fib extension. Resistance above at this 138, along with the round figure of 120. And the next key resistance will be at this swing low at the 100 fib at 121.55. So this level here is the next major resistance. So let's see if it's able to make any significant recovery this week. It needs to break above the 120, the key round figure here. There's only some minor news with the jobs report and flash PMIs. Let's take a look on the weekly time frame. And for the last 3 weeks, it's been drifting lower and lower. And if it does dip lower again this week, it could target the 200 fib extension at 116.44. So we'll see whether there's any significant support from this 118. So it needs to climb back up above the 120 and find some stable base to build upon. Okay, so critical level now. In fact, this could be interim support. And let's move key support here into the 116 and the 200 fib extension. Okay. All right, let's move on to the Aussie dollar, where similarly on Thursday, it did dip lower below the 67 round figure. Just dip below that and attempted to test this. We go to the weekly time frame. Attempted to test the previous swing low here from 2020. Sorry, not this one here. Is from all the way back here in 2019. That's the one that it attempted to test and managed to find support to bounce back up. And we'll see if it's managed to find support there or whether it's just going to consolidate between the 68 and the 67 zone. So it needs to recover back above the 68 and back towards the 162 fib. Otherwise, it's still stuck in a lower range here. Go back to the daily time frame. So this is now the key support zone. And this previous zone here could be interim resistance. With 69 and 70 above that. Those are the key resistance levels. Back into the 138 fib extension. All right, so at least for the Aussie, it does look more supportive. Looks like it's able to make a significant recovery back up to 68. It needs to break through and not just the 162 fib and target the 69 area. Otherwise, it's still going to be stuck in this lower range. And it needs to stay above this key support zone for now before the Federal Reserve the week after. So next week is a potential recovery week. See if it's able to recover all the way back to test this previous trend line. All right, so there's only minor news for the Australian economy as well, just a jobs report. And it'll be exposed to the other US news as well. No major ones for next week. Okay. So do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.